The thing that sticks out to me is the two-way traffic on some of the biggest tech names and some of the beaten-up ones. That's maybe the thematic element here. So, Stephanie Link, you're looking at me saying, maybe it's a little skeptical on some, but not on others.
Yeah.
What were the good buys then, and what were the ones that you'd want to stay away from?
Well, no. I mean, I think if you add in technology and comm services together, it's 35% of the S&P 500. So I'm underweight. I've been underweight. Maybe I'm 20%. I'm still 20% of my portfolio. So I think you can pick and choose in terms of what you want to own. I think you want to have a barbell. That's at least my strategy. So it's kind of some value, some growth. So I like IBM, for example, right, on the value side. And Broadcom is a fairly new position for me because it, too, dropped. And I thought it was pretty interesting at the valuation that it was trading at. I own Fortinet, and unfortunately, they didn't have a great quarter, and it fell 18%. I bought more there because I like cybersecurity. Accenture, they've done a great job delivering in terms of just on top line, bottom line. Every day they're making small acquisitions to grow their business, and it's a hidden cloud play. They have a relationship with Salesforce.com. So there's places, I think, Dom, that you could add to. I just don't know. I don't want to traffic in where everybody is trafficking in. That tends to be kind of the FANG names. I own Meta. Unfortunately, that's been the dog, but that's the only one I'm playing at this point.
Jason Snipe, the big tech trade has been something that a lot of folks are following because it's been the leadership for the past decade and a half. Every time there has been a dip in the market, there has been a recent dip in the market, and they are leading once again. So are you sold on this tech comeback that we're witnessing right now?
So, Dom, obviously these names have run a lot, as you mentioned, over the last decade and since this bear market rally has begun. So I think what I would say about Megacap Tech is price really matters. You look at a Microsoft or an Apple, both trading at basically 28 times forward. The market's trading about 18 times with a Fed that's truly engaged, and also QT, starting in September, like I mentioned earlier, block. I think you have to be selective, as Steph said. I think you can't just buy in a broad stroke, but there are some names that still have nice earnings growth, but I think you have to really be selective. I like cybersecurity as well. I like Qualcomm. I like some of the semis here. And then Apple and Microsoft are names that have been mainstays in our portfolio. But that's our read on the tech sector as it stands right here.
It always seems to be Apple and Microsoft and Alphabet, and maybe to a certain degree Meta, although it's had its own problems. Jim Lebenthal, I wonder if that's the trade, do you kind of go with the same names in technology, or do you say maybe it's more chip-focused this time around versus just, say, Apple, Microsoft, or Alphabet?
Well, first off, I want to thank Jason for bringing up Qualcomm. He knows that's one of my favorites as well. But in answering your question, what I'm doing with tech, first off, I'm slightly underweight to the market weighting as per the S&P 500. Now, what that means, though, is I'm still about 23% in tech. So it's a meaningful portion of my portfolio. I'm in what I consider the value-oriented portion. So that's Qualcomm, that's Cisco Systems. And then I have some FANG names well underneath the market weight. So I've got Microsoft, Alphabet, and Apple. But my overall underweighting is a way of saying, yeah, I think tech is going to be just fine. It's not where I expect the market-leading performance. For that, I expect cyclicals, and that's why I'm overweight in things like energy, materials, industrials, and financials. If you disagree with me, obviously, don't be overweight there, but I have a thesis that economic expansion is set to pick up in 2023. One of the things, though, Dom, I want to point out that I find telling in these hedge fund reports is you don't see any of these hedge funds loading up on utilities or consumer staples, and I mean real consumer staples like a Kimberly-Clark. You don't see them hunkering down for some huge recession that they see in the offing. That, to me, is a pretty positive sign. Yes, I understand that large cap tech FANG is looked at as today's defensives, but if you really thought you were going into a recession, if these hedge funds thought this, they'd be in utilities and staples. That's not what we're seeing.
Josh, what do you think? I mean, this idea that you don't see a lot of these funds wholesale going into those straight-up defensive plays. Utilities may not have been that play in the past, but consumer staples certainly have been at points in the history when you're trying to avoid a recession. Is there anything that you're seeing that makes you feel as though this is a defensive tilt in any way, shape, or form?
I think when the large hedge funds want to get defensive, they're not going long utilities. They're shorting stuff. or they're putting on options trades. They're not long only. They're not fully invested. They don't have to hide out in staples or utilities. I don't think that's. I think that's a non sequitur. What I want to talk about, what I thought was most interesting, Dan Loeb getting involved in Disney. Dan Loeb very successfully took on Sony. Very similar situation. They had a lot of non-core assets that were not helping the cause. That stock is now 100% higher than where he had initially got involved with the company. And so I'm really going to watch that one closely. I think it's good for Disney to feel a little bit of the heat, even if they don't respond directly. But I also think in my portfolio, CrowdStrike, this is an unsung hero for me. It's a large text, let's call it a mid-cap technology stock. This is one of the best performers I have. It's now flat on year, which is miraculous for a SaaS software company. I think cybersecurity is one of the biggest challenges over the next 10 years, no matter what the Fed does. It's not related to global growth. It's going to continue to be very important for companies to spend more money on every year. CrowdStrike acts very well, and we just found out that 0.72 bought about 800,000 shares last quarter, according to the filing. So that's almost the whole position that they have was just purchased. So CrowdStrike for me is the mid to large cap tech that I'm most excited about, that I'm currently invested in.